No permissions, birth looked up, taking flight falling. Knows dissidence, balanced in dark and light. Steadying the agreeable index plight. Crypto tuning up, yup, keeping it right. Yup. The meme that's on the rise. Agreeable intense. One on a Pulsechain's pride. Opening those minds with all the positivity. Marching in its time. Cadence in the grind. Agree to disagree. Yup. I thought of tiny. Me up hits it right. Freedom and prosperity. The destination and the flight. Lighting up Dad's farm. Opposed to that, nope, rule. Firing up them charts, yeah, flying straight and true. Wink at the foes, cheer at the woes. Yep, stack sats gliding through the lows. The truth will set you free.
What is up, guys? This is Bright Light Crypto coming at you live. It was a good one today. We are going to be talking about Vox Finance and people that have been using the platform. All full disclosure, I have not gotten into any of this yet. I've just basically viewed the web pages, stuff like that, and I'm kind of intrigued, so I thought to bring them on and let the community know more about Vox Finance. So let's bring everybody up, and we'll chat about Richard Hart and some of the tablet marketing, and yeah, go from there. How are we doing, guys?
We're doing great. Thanks so much for having us.
Yeah.
Yep. Thank you for having us, Bright Light.
Yeah. Believe in yourself is here. He is here to be agreeable. And so, yeah. What do you guys think about this kid tablet stuff going on with the Richard Hart marketing stuff? Do you think it's going to be good for the Pulsechain or what?
Man, 100%, man. This thing is there's so many criticisms, but end of the day, right? No one was expecting any marketing, right? So when people first started getting the idea there was gonna be some physical marketing like this, right? You're getting at least 400,000 units going directly, and I assume they're going to be targeted. They're not going to go to any old household. Richard Hart spoke in the past that he's going to target people in affluent areas, so they're going to be targeted. He is the spam email king, right? That's kind of what we know about him. He knows about marketing. I think he's going to target people correctly. We're going to have some sort of brand awareness. It's not going to be the sort of thing you throw away. There's lots of psychological stuff that Triple Dad has mentioned about this. But when someone receives a gift, psychologically, they don't dispose of it, right? So yeah, I think a lot of people might put it in their kitchen. Look at what the hell is this? And then they'll actually realize what it is. There might be a note in there. Hopefully that'll be useful. They might write their grocery list on there. It's going to be something they look at multiple times a day. If they don't use it themselves, they might give it to their kid. They might give it to their neighbor, their friend. But I think it's a good touching point. And even if it is kind of, some sort of a, thing that people are kind of dismissing, it's not a bad ploy if loads of money came in from different places and you could say, hey, it's not me buying, it's all these new users, right? So I think if anything, it's an indicator that Richard Hart is kind of saying, right, we're starting to move now. So I think we should all celebrate this period, for me anyway. I'm not sure what you guys think.
Me personally, I would be like, my kid would like draw a picture on it or whatever, and I'd have to put it on the mantle for a week or something like that, and over and over and over, maybe like grocery list, like you said, just getting Pulse, pump tires, Hex, all that stuff in front of just kids' faces and families' faces that aren't even in crypto is just hella bullish. You know what I mean? And to get a piece of mail like that's just like off the wall to me. Like, why would somebody mass send out a bunch of these kid tablets? I think it's just personally awesome. But
and then some people are going to go and say, what the hell is this Hex thing, right? And someone was saying earlier, we're going to be able to see the traffic increase by the Google searches for these website names, from the visitor stats. And someone said, even if it only takes like a few percentage of these people to go on and work out how to deploy some capital, you're talking about hundreds of thousands of people that are going to talk to their friends about it. You don't. I'm sure we all know from our experience, right? You don't go to hex.com, learn about it, learn how to buy the token either on ETH or on Pulsechain, and not talk about it, right? You end up talking about it, so you end up being an onboard and a marketer yourself. So I think it has that network effect. So I think it's bullish. I don't think it's going to be the thing that makes us rich this cycle, of course not. But I think it's a really bullish move. It shows people that he's active and he cares.
Definitely shows some seriousness. Like, I don't see any other like crypto projects doing anything like this. Like, just Pulsechain people, you know. What do you guys think, Vox and DeFi Nation?
I agree with what you guys said, 100%. And I think people underestimate like the long-term effect of, having those devices. People are not gonna, as you said, it's something cool. You might give it to your kid. You might use it to write down your grocery list. So it's not something that you're gonna toss away into the garbage. So it's gonna linger around the house. And I think people underestimate like the long-term effect of that brand awareness being there around the house, around somebody that visits the house and checks it out. And then these devices being, if you don't want to have it, you're probably going to give it to somebody else. And then it just creates a massive brand awareness. And, I was doing a little bit of research on what usually happens in these types of campaigns and the ROI expected. And, based on my, obviously, it's just my little bit of research, but it translating it into dollar values, it would be expected to have around like $5 million, capital like inflow with this type of marketing campaign and brand awareness. Just a little bit of research I did based on like similar campaigns in the past. So yeah, I think it's nothing but positive, and the people that are complaining is like, well, seriously, just sell your bags and leave the chain.
Yeah, sorry, DeFi Nation, go for it.
Oh yeah, I mean, I was just gonna say, it's, if anything, it's just a good indicator that he's, marketing his products, that he's going to continue support and be involved and try to push the ecosystem. And also, like, I think there's already like $10 million on chain from a few weeks ago that came in. That was like first like Tornado Cash before it like bridged over, which I think a lot of people already know that's from from RH, most likely. I don't think it came from the SAC fund, so maybe it came from his other funds he already had sitting aside for this. So like Sammy said, I mean, this might just be kind of a plausible deniability when things start pumping to say, oh, it's the marketing that's working, not just like RH buying up the his tickers. So it kind of works all like hand in hand.
Yeah, and from what I'm getting the sense of in the market, it's like 200,000 of these a month is going out for the next foreseeable future until like we hit 2 million of them or something like that. Don't quote me on that, but that's just like, this is like gonna take a year of like, pushing, shoving, and packaging and getting these things out there, and we're gonna see a lot of posts about them probably in the future, things like that. So yeah, it'll probably take people by storm and go, what the hell is Pulsechain, and just want to look it up from there. So
I tell you what, I also this morning I was sorry, DeFi, you got a hot mic. This morning I was also looking at something. I was talking to Vin Luck, my friend, also Pulsechainer, and we were looking at this piece of news that was kind of hitting the mainstream of the crypto news, and it was an anonymous whale over the last few months has transferred $5 billion in Bitcoin over to ETH. And obviously we're kind of speculating, well, that's interesting timing, right? And now he's actually, so you got Bitminer, which is obviously got around $7 billion worth of ETH, which is number one. You had SharpLink, which is number two. So he's literally, this anonymous whale, which is not a company, has now taken the second spot. He's not there on the list that we all look at because he's a private wallet. But now that person has come out of nowhere and now the second largest ETH holder. So I can't help but speculate. Obviously, I have no evidence for this, but I can't help but speculate. But maybe that might be Richard Hart, right? So
I think that was converted from Bitcoin too. It was like something like
yes,
30,000 Bitcoin that was swapped into Ethereum before that.
yep, that's right.
Yeah.
So I wouldn't be surprised at all. I mean, obviously, it's rumored amongst educated circles and Pulsechain that Richard Hart has around 300,000 Bitcoin. I'm not sure on the math on that, on the total that would equate to. But yeah, that sounds like a Richard Hart move to me. It sounds like he's starting to move. It sounds like he's kind of taken the risk off of Bitcoin and putting it into ETH. And now, so not only have we had that money that DeFi Nation said come over the bridge, but now we've kind of, if it is him, we've started to see some more money on his private wallet, not just the SAC fund, which is like number 5 in the ETH holder. Now maybe he's number 2 in the ETH holding. So I think this is all just super exciting for me. Obviously, that's a speculation. We don't know that that's him.
Yeah, Bitmine immersion text got targets ETH 5% of the ETH supply they want to get a hold of, and then we got the Ether machine that wants to get another 10% of the ETH supply. So there's 15 million right there, pretty much, just like they want to hold it. And the Ether machine and the strategic reserve has only accumulated 3%, and the Bitmine is only 30% right now. And SBETs, they want a million ETH, so they're 80% of the way there. So there's some demand there for that person, said person, maybe Richard Hart, to come in and like pass the torch. You know what I mean? Hey, it's your turn to hold. A great way to exit instead of hurting the charts, or things like that. It is a total institutional kind of type of move to me. So I love it, and with these marketing things out there, it just brings more heat to the party, right? But other than that, let's start talking about Vox and what's up with Vox. So Vox.finance, I've heard about it, things like that, and I've got some questions like what tokens do what and what can you earn on Vox. So can we start to dive in on Vox, and I'll bring it up so everybody can see?
Yeah, but I mean, I'm sure we'll let Nova jump into that, but I just want to say, first of all, like, farming, right? The real question is, why are you farming on Pulsechain, right? There's not many people who are actually farming in Pulsechain right now, which is crazy to us, because I think the value of farming is so good, right? I mean, you see, we're just talking about Ether, right? And we're seeing where all these big companies that are they're accumulating Ether. Do you think they just let it sit there? No, they stake it, right? They stake it and they earn yield, and they can pay their investors with it. It's like a dividend, right, on a stock. So it's a natural form of investing to try and utilize your assets to earn your passive income. So if you're going sideways in a chart, it's natural to accumulate more of your RH tokens, and maybe pay yourself a small wage to get some groceries every now and then, whatever you need to do with it. So obviously farming was super popular when Pulsex first came out, as I'm sure you guys remember. There was some great yields on some of the native farms, and we had a 9-inch, stuff like that. And we just kind of, after obviously the Richard Hart kind of went into kind of the bull period, obviously he reduced those fees. 9-inch had its problems, kind of disappeared. And then we just kind of noticed that there wasn't really any decent farming protocols around. So obviously you've got emit.farm there now. But, I think Vox has got a fantastic offering. That's why I got involved. Tokens bottomed out. So for me, it's a safe entry. So that's why I got involved. I wanted to earn passive income and grow my RH bags. So, I thought I'd touch on that before we go into kind of the details of Vox, and I'll let Nova kind of give his spiel on that.
Yeah, that was a great intro, Fat Sammy, and I'll just add my 2 cents. Vox is most of us builders, OG community members on Pulsechain. We start as the chain progressed within these past couple of years, we all start to get to know each other. Who are the legit OG people who care about crypto, who care about Pulsechain, and who are the legit builders. So it's kind of a conglomerate of different protocols, not necessarily some of which we developed. I mean, all of it we had active development, but not some of the protocols. We're not actively leading them as the founders, example Incognito, Phoenix. But it's a conglomerate of people working together, true organic community. and deploying, tried and tested contracts with, code that's verified. You can check on chain what the code is doing, which is the most important thing. We just want to give people safe space to earn yield on Pulsechain, and a superior value proposition to most of the stuff that's offered on Pulsechain, right? So we believe in, in you earning yield and you providing some utility to the chain. You're burning RH core tickers. The code you're interacting with is verified. Our farms are a fork of PulseX. You can check the code on the scanner. Most of the liquidity is burned across the protocols. Obviously, the farms is not, because people are constantly adding and removing the liquidity. All the stuff is no admin keys. So it's a place where it's true organic community driven movement on Pulsechain, stuff that stands for the true crypto ethos. And we actually have underlying tech that's really powerful behind it in terms of bringing yield and utility. And that's what we've try to do with the farms. It's our latest developed contracts where, whenever we deploy something, as I think you've seen on a lot of protocols on chain, they keep evolving, they keep getting better, they keep offering more value, different ways to buy and burn and offer more yield and provide some sort of economic strategy, game theory to accrue more value for investors. And that's what we did lately with the farms. They have a super cool game theory, which I think a lot of what people lack on Pulsechain is just the education aspect. Diving a little bit deeper into the rabbit hole, exploring some of these great projects, not just ours, but a bunch of different very good, legit, solid builders on chain. So that's what we've been trying to do with the farm. So there's a very interesting game theory, which in the farms, you're not only earning insane APR, but you can also burn RH cores. You can also yield RH cores like PLSX, Inc. You have single site staking. So I think we're going to start with Vox. I don't know if anybody wants to jump in and add comments, but otherwise I can go and describe a little bit of what the Vox farm is to start.
Yes, obviously Vox is the flagship token, right? It's Vox is the main token with the most liquidity, so that's kind of the first one that was created. And then you have a increase, then you have hype. So they're all the kind of tokens that surround this. And then there's another one called Zilla that burns Vox. But yeah, I don't know if DeFi Nation wants to kind of break it down before we go into the individual farms.
Farming on Vox, probably just after I started on Emit about 6 months ago. So I actually was helping Keros kind of with the Emit launch and getting some of the initial marketing out and with the live streams and just getting the exposure there, and that launched, and then started kind of discovered Vox around that same time, and was like, oh, these are really good farms. At the time, I think it was only the Vox farms that were live. And the APRs were high. Everything was paired with the RH core tokens like PLS, PLSX, Hex, INC. So I was like, all right, I'm going to try these. And then Nova had rolled out the Hyperion farms shortly after, and then the increased farms was the latest one. So I just got into all three, and I was just earning really good yield. Farming, I was able to just compound, build up my LPs, where eventually get up to be earning like hundreds of dollars a day in yield, and just keep compounding, because we're at the beginning of kind of like Pulsechain's like altcoin season, so there's really no reason to sell the lows. So yeah, I just thought it was a really good product for DeFi product, and for farming on Pulsechain. So I kind of started getting involved with the team, with Nova, and saying, how can we kind of get awareness out of this, because I don't think a lot of people Pulsechain really aware of these farms, and that they and that's when kind of we started kind of putting out some of the messaging and the marketing, and got Sammy involved, and started going on live streams. And we just went on Corey Geary's show last week. We're going to be going on Corey Costas next. So I mean, it's just really like undiscovered DeFi on Pulsechain that needs more of like a light shined on it, I think. And so yeah, we can go through the farms. The Vox farms are kind of a little on the like lower end of the APRs because they've been out the longest. They're still really healthy APRs, but you'll see when you go to the hype and the increased ones are a bit higher. But you're going to be paired with all the core tokens, so PLS, PLSX, INC, DAI. Those are all around, around 200%, 300% APR. I think you can kind of walk through those pairs and see what's available. There's also a Pulse, PWBTC pair. I think we have a Braya token pair, which we did a collab with. There's a Surf token pair from the Crypto Paradise team that had a lot of TBL initially. So we've done a few of these kind of like collabs and partnerships to kind of like get other communities involved there too. If you want to walk through those farms at all.
Yeah, I just want to say, so obviously, for any audience that aren't aware of farming, it is super easy. It's not a complex thing, right? But even if you kind of had some of your audience members that might maybe just want to dip their toe in, sorry, you got hot mic DeFi. Even if you had like some of your viewers that said, look, I don't want to go and buy some Vox token. I just want to dip my toe in the water. Well, look, you can go to the Vox farms here, and we've literally offered you single size staking with PLS. So you can maybe, let's say you got, I don't know, $100,000 of PLS. Why not take $5,000 of it, stick it in a single sided farming, and look at what you're getting right now, 150% APR, which is crazy, right? Obviously, that's going to go down as that fills up. We've only just launched that one, I think, in the last 24 hours. But it's only got $1,500 in there, but I know that one will fill up quick. So there's no risk to you there, no counterparty risk. There's no risk of impermanent loss. So what you might want to do is you might want to stick a little bit of money in there to test it. Come back in a week's time, click the claim button, and you might find, oh look, I've got a bunch of Vox there. Now you might go, oh, let me take that Vox which I've earned for free. Oh, I've got a little bit of hex up here, or I've got a little bit of incentive. Let me pair those. Let me pair a few $100 there and try that out. And then what you'll see is your daily accruing there, and you've not even have to buy the token. And then later on, you might decide, oh yeah, I like this. I might want to buy some of the tokens. So we're kind of doing this to kind of show goodwill towards Pulsechain, because we want to see Pulsechain succeed, and we think part of the longevity of people staying in Pulsechain, especially in a bear market, will be these yield assets, and another thing about impermanent loss before we go into the individual charts is, you look at this chart here. What do you see? You see, well, the traders came in and they ran it up. Traders do that, right? Traders come in and they trade tokens and they pump and dump it. And now you kind of see that you've kind of got down the bottoms here. You're in a low risk area. So when let's say you're paired with Vox and Pulsechain, or Vox and PLSX, as you see PulseX move up, you're in a kind of low risk area here, and then you kind of want to be in a situation where both tokens start to rise together. That's the ideal situation for farming, right? Your Vox is going up, or your hype, or your increase, whatever token you've selected, and then the token you're paired with is going up. So I just want to kind of put that base down before we kind of go into the farms, if that makes sense.
Yeah. And then I was just gonna add, a couple more comments. Those were great intros. For anybody, worried about, oh, farms, I don't do farming because farming is inflationary, farming is just, the tokens will just get dumped, it's just, people are just going to sell it for profit and it won't hold any value. So what we offer is actually a different value proposition there, right? So because we want to make these farms very sustainable, and we want to make the yield very attractive. And that's what we're seeing. We still see APRs of upwards of 200%, even after these farms been live for several months, right? So one thing I wanted to keep in mind for anybody who's new and exploring the protocol is the emission rate is actually really low. It's just 0.1 tokens per second. If you remember, Inc.'s emission rate was 1 token per section. This is 10 times less the emission rate. And if you look at the long-term time frame, after 10 years of token emissions, there's not going to be much more than 31 million coins in the market, which is a little bit more than 50% of the supply of Bitcoin, right? Which is a super small supply. So these are actually incredibly scarce assets, right? And so which right now it's kind of the distribution phase where people are earning the yield, just like as, you know, people were mining Bitcoin, but instead of mining it, you're doing the liquidity mining, right? Which is providing liquidity and earning a reward for having that skin in the game, right? And so the emission rate is really low. You know, even after 10 years, there's not going to be much more than 31 million coins. And the inflation in year 10 is going to be no more than 10% a year, since this emission is linear. So, and 10% a year is no more than what your dollar devalues. And then last but not least, take Vox, for example. It's a no-fee token, so there's no taxes on it. But there's several different other protocols that are actively buying and burning Vox as people transact these other protocols, which is Zilla, which is Hype, which is Increase. So you also have just general buy and burn activity, just of people using the ecosystem. So again, really low emission, super small supply, even after 10 years, no more than 31 million coins. And there's going to be the coin is being actively bought and burned, right? As people transact other protocols like Hype, Increase. And so it already burned 3% of the supply, right? Already. So just wanted to add that 2 cents on Vox.
And a little bit goes a long way on liquidity providing, especially if you just set it and kind of forget about it for a couple of months and you come back and you're like, whoa, wait, I earned all that much already, whatever. And then you use those free tokens that you get, and then you can just hold them and then earn more coins on top of that. That's what I'm hearing on some of these tokens that you earn.
Yep.
Yeah, so, I mean, you can maybe, as I say, maybe you single-sided stake some of your cores. So maybe you dip your toe in, single-sided stake some PLSX, single-sided stake some PLS. You earn some of those rewards. You go, okay, let me mix some of these tokens with some Hex. Oh, I'm earning more rewards now. Now maybe I've got some Vox and I've got some Hype. Let me put those together, and that farm earns some more. And then what you'll find is you're compounding. You're getting excited. You're seeing that money drip feed into your account. And then you can even say, right, I'm farming on emit. Oh, I've got some emit. Well, there's a farm there for emit and Vox, or emit and Increase. I can't remember which one it is, and then you start to kind of realize what's going on here. Then you get excited about it and you want to tell your friends about it, because your friends are there sitting there waiting for the bull run, and you start to go, well, we're going sideways and I'm making money, you know, and it's what should be, it's what you should be doing, because people in legacy finance are doing that. We are supposed to be DeFi offering these similar products, so it's a no-brainer.
Yeah, so the Hype and the Increase tokens are like what do you call it? The reflection tokens. So when you claim them, like when you farm them from your LPs, and you claim them to your wallet, you just have to let them sit in your wallet, and they're going to be earning you rewards and reflection rewards. Hype earns PLSX reflection rewards, and Increase earns INC reflection rewards. So Vox is the only one that doesn't. Vox is the only non-tax token. The other ones have a tax around 5% or so. I think 1% goes to buy and burn, and then the other 5% or so is a reward, like a reflection to the holders. Either if you hold it right in your wallet, or if you hold an LP outside of the farms, just in Pulse XV2, then you also get rewarded for that. So yeah, I mean, you can continuously earn. It kind of like closes the loop a little bit on those two tokens, where you don't have to sell them to take your yield. You can earn yield on top of that. And yeah, there's single side stake pools on PLSX. I mean, on Hype farms now for PLSX single side staking. I think they're around 60% APR, probably about $5,000 or so in there. And then on Increase, there's a INC single side stake pool around 60% as well. So those have been out for about a week, have a little more TVL than the PLS one that was just launched, I think, yesterday. So yeah, you can take your core tokens. You can either go in the farms with the farm tokens, or you can just single side stake, or you could actually just do the native farms like PLS, PLSX, INC, PLSX, PLS DAI, and you can earn rewards all those different ways.
Yeah, you got so many options, basically. It's like every one of us has a different strategy. That's the thing. There's so many different options you can do with this. It's kind of it's real DeFi, you know. I mean, I say there's not just all these farms, all these different mix-ups you could do. Integrating all the other tokens you might have, and then compounding in your own way. You might want to compound your Vox with hype, or this way or the other way. But you've got that extra option. You guys say, I don't like tax tokens, so you might say, I'm not touching increase in hype. I'm just sticking on Vox. But then you might say, okay, I'm going to be in this game for a long time. I understand that farming is not a quick way. You have to be in it for at least a few months. And you might say, do you know what? I'm going to store up some hype and I'm going to earn some PLSX natively just by sitting in my wallet. And then there's even more game theory, right? I think you can provide, like, let's say you provide hype and PLSX liquidity or PLS liquidity. You have to correct me in a second, Nova. And you put that on Pulsechain V2. Don't even enter a farm. You'll get like a 4x on your rewards just by doing that. So there's so much game theory here. It's so I'd say jump into Telegram and ask some questions. It took me a while to get to see the whole kind of suite of different things on offer, and there's more to come.
Yep, you touch a good point, Fat Sammy, and then I was just gonna add a few comments because I think this is the most important part, right? So people go to Vox, they think it's just some regular farm, and the tokens is gonna be inflationary, and then people are just gonna perma sell those tokens. But I'm trying to educate people to say that these tokens are actually very scarce. They're actually being bought and burned. And then in case of what Fat Sammy was saying about hype, there's this game-changing, really game theory, in my opinion, which makes these farms really attractive. Which is one, right? As he said, if the token that you're earning hype, right? If once you claim it and it hits your wallet, you let it sit there, it's going to be dripping PLSX into your wallet without you doing anything. So why would you want to sell a token that you earned if that token is putting PLSX into your wallet? So there's one incentive not to sell that token, right? And to actually want to compound or acquire more or stack more of it, because that's going to make you earn more PLSX. And then since those PLSX rewards are, reflection based, there's a fee when people transact, right? There's 5% fee when people buy and sell hype, or when they add and remove liquidity. So that 5% fee approximately, right? A little bit is going to buy and burn Vox. A little bit is going to burn PLSX, and a little bit is going to burn a hype itself, and then a little bit, the majority of it is actually going to buy PLSX in the market to distribute it to the holders who are not in the farm. So what happens is, in regular tax-based reflection tokens, though that yield generated by the trading fees, it's going to the entire supply, right? To 100% of the holders, it's getting distributed proportionately. But in this case, it's just going to those few people who are actually stacking the token outside of the farm. So you imagine 80%, 90% of the people, they're actually into compounding those gains for the high, 400%, 300% ROI in the farms. And then it's just like 10, 20%, 5% of the users who are actually stacking that token outside of the farm and helping hold the price. So all of that PLSX yield generated by the protocol, it's going to those 10%, 20% people outside of the farm. So they're actually earning, 5x more, right, than your regular tax-based token, because it's getting distributed to 100% of the holders, right? And then another interesting point is most of these tax-based tokens, they don't offer an incentive for you to add liquidity, right? And we all know that liquidity is everything, right? Liquidity dictates how much slippage you pay, how much you can sell when you want to sell. So if you provide liquidity outside of the farm, right, you actually earn a 4x multiplier on that PLSX yield. So it means your shares.
And just to clarify on that point, are you saying, so obviously what we're talking about here is, obviously everyone wants to make, we've got 3 tokens here: Vox, hype, increase. Obviously everyone wants to have thick liquidity on each of those, right, to get in and get out. So are you saying that is exclusive for each pair with PLS alone?
Yeah, so you can do that in PLS, you can do that in Inc, you can do that in PLSX. So in PLS, just for simplicity, it pays up a 4x multiplier. But if you pair it with Inc or PLSX, you're also paying a 3x. You're getting a 3x multiplier. So basically, hype represents your share on that PLSX yield, right? And then, but if you have it in liquidity, inside a liquidity position, that share, you multiply it by 4 times, so it actually, you get 4 times the amount of shares that represent your share on that yield. And the interesting concept is, the issue with most of these tax-based tokens is that, people get excited, and then they trade, it generates some yield, the yield gets distributed to the holders. But how do you earn that yield? You earn it by holding, right? And then that's what a lot of people do. Everybody starts holding to earn the yield, and then the trading kind of dries up, and then the yield starts drying up, and then people might start selling, and then only the true believers, holders, they start earning that yield, right? But it's very inconstant, right? Not constant. But with the farm activity is the natural compounding, the natural profit taking, the natural adding and removing liquidity to get a different APR in a different pool, or just natural compounding, that is fueling the revenue of the taxation for the people who are holding it outside of the farms. So it kind of closed the loop with that revenue system, right? So, and to pointing out that these protocols are extremely in its infancy. There's $10,000, $15,000 in the liquidity pools. So I keep pointing out this fact. So if we get 100 new members, willing to DCA $100 a month, you do the math, that's $10,000 coming into the pool, so in a month, so that's 120,000 a year. So 120,000 a year of capital inflow coming into a 15,000 liquidity pool. And then you can imagine what that will do to the burn, to the yield, to the purchasing, buy pressure in terms of price action that can happen in these tokens. So they have a very, very tight game theory in terms of you're earning a token that you actually want to hold, long term. So I don't I'm earning hype. I'm not selling any of my hype, because the hype I keep in my wallet is just paying me PLSX, right? And then if I add liquidity and enhance, strengthen the ecosystem, I'm earning even more PLSX. And most of the people are chasing that API farms.
Yeah, and also between the V2 and so we had a minor routing issue that had to be fixed, that we had to launch the V2 farms maybe about a month ago, but it went really smoothly. Everything was up and running in under a week. And it didn't affect any users. Everybody just migrated over. But between the V1 farms and the V2 now, there's been over 200 million PLSX that's been paid out to the hype holders just from their wallets between both farms. So that's going to keep growing. Eventually, it'll be over 1 billion PLSX. Eventually, it'll be several billion, and it's just going to keep growing and growing.
I can definitely see some game theory in this. You single side stake your Pulsex or whatever, then you earn your hype and your Vox or whatever, and then you got your hype, you're earning some Pulsex through the tax rewards and stuff like that. Then you enter those into another farm to get you more rewards even, and a little bit goes a long way here, as long as you take the time and month after month and farm and stay convicted and DCA, and even what Nova was saying was $100 a month for each person or something like that. That goes a long way for any protocol, you know what I mean? Especially if you have 100 to 1,000 people doing that. It pushes the volume, it pushes the drips to all the tax tokens, things like that. It's definitely intriguing for this system. I do like it, and I think some of my audience will like it too. Most of them go on the replay. They're probably surprised I'm streaming today, but yeah, it's
and yeah. Sorry.
Yeah, we got about a month ago. We really started cranking up the marketing when we started kind of going on streams and talking about it and sharing with, creating a marketing support group. And so we got that was after we had basically about a month of just sideways, it seemed like all 3 tokens had bottomed out. This is when Sammy had kind of come on, got involved with the marketing, and they were just going sideways in the same range for over a month. So I think Vox was down around 1.5 cents at its bottom. Hype was around 2 cents. increase around, I'm not sure, like, so then we started kind of cranking up the marketing and getting the word out. And so we got a 4x on both Vox in increase, and we got an 8x on the hype price. But hype went from like 2.5 cents to about 16 cents. Vox went from 1.5 to about 7 cents. And then, so in the last about 3 weeks, we've kind of had a retracement because all three tokens really, had their pumps. So they've had about a 50% retrace just from naturally people taking profit and selling. But usually you see like the accumulation kind of time, and then they go on to make their next kind of like moves up. So that's kind of like where I feel like they are now. We're kind of starting to like, promote again, like on these streams and everything. So, and also for compounding, we've kind of built a way where people can take like their tokens and just put them back into the farms. So there's a Vox hype farm on hype. So you can take the Vox you earn from the Vox farms and the hype you earn and pair it together. That's probably 300-400% APR. There's a hype increase farm on the increase farms. And there's also a Vox increase farm on increase farms. So all three tokens, you have every combination of like basically compounding them together, or just taking your rewards. We've even talked about having more single side pools for the farm tokens as well. There is a single side pool for Vox token. So yeah, I mean we basically give users every combination of like taking their tokens and pairing them back together, putting them in the farm, and just building up their LPs.
Yep. And I was going to say that, there's more farms that are going to be launched. A farm that yields Hex, a farm that yields Most, etc. Whatever tokens attracted. And as each of these farms they get deployed, the transactions that they're making within the ecosystem, that's, that all goes to generate more yield, more buy and burn. A new opportunity at more attractive APRs, and people reshuffle and creates movement within the ecosystem of like natural compounding, unstaking, removing, adding liquidity. All that's fee generation, right? And we know for a fact that these contracts work, right? They're an iteration upon like Incognito, Phoenix, which are very successful contracts. So Incognito, it paid out almost 130,000 ink already, right? And that equates to more than $200,000, within less than a year, on a liquidity pool. That's main liquidity pool. It's $53,000 worth of liquidity right now, Incognito. So yeah, if you check that out. So if you check out like $200,000 in yield, and then the main liquidity pool like PLS is $53,000, right? So it paid out 4 times in yield, in the ink yield alone, right? Not to mention potential price appreciation that happened. But the thing is, these farms like increase, for example, it's an iteration of that. So it's paying out the ink yield, it's doing the buy and burning of ink, but you have that constant revenue stream, right? Of people naturally adding liquidity, capturing some profit. So it's kind of an iteration. The difference is Incognito is fixed supply, right? And then with increase, you have that constant emission, which helps generate the revenue, right? Like it stimulates people to stake, compound, take profit. And then again, you're burning RH core tickers, you're earning RH core tickers, you're earning V2 Pulsechain trading fees, and then you're earning insane APR, right? 400%. So there's a myriad of ways to earn, and also you can choose to, as DeFi Nation Fat Sammy was proposing, you don't want to get exposed to the token, you can single site stake. You can just stake your LP, RH cores, Pulsechain, and ink, for APRs that you're not going to find it anywhere else. 57%, 64% in RH cores. It's also mind blowing. So there's a ton of value there in the ecosystem, and with more people using it, it's more yield, more buy pressure. This whole thing just gets better. It doesn't get worse with more people using it. It just gets better. Yep.
And this is exactly the sort of thing like we need for the long term of Pulsechain, right? So we want to get to a point where what did Richard Hart say about when he first invented Hex? He said he wanted Hex to be different to all these other altcoins because he didn't want it to dump 98% during a bear market. And he encouraged all of his early whales. He said, stop pairing with ETH. Stop pairing with ETH. Pair with USDC. So then we can market ourselves in a bear market. They didn't listen. So he was very frustrated with that, right? So a lot of the success of Pulsechain, everyone right now is focused on the pump we're going to have. And I'm pretty damn sure, like everyone else in this room, that we are going to have a pump. That's why we've been involved in Pulsechain for so long. I think it will be glorious. How glorious, we don't know. But I think, you know, protocols like this are really, obviously I think it's important because we have an elongated bull market to farm right now, right? You have a long period of farming before you even have to think about selling. That's the first point. But the second point is protocols like this, building up the awareness of them. When we do go into a bear market, a lot of people are going to have to pay a lot of taxes when they take their money off chain. Like pretty much everyone's plan is, oh, I'll dump my Hex, I'll dump my Pulsechain, I'll take it over the bridge, I'll pay my 50% tax, and then I'll re-enter the market in 6 months, maybe buy Bitcoin and then Pulsechain maybe later, right? But I don't think it's going to play like that. I don't think Richard Hart wants to play the game like that. I think if we learn from what he said originally, he wanted Hex to be different. I think this is his second attempt now. So I think a lot of people will want to keep their money on chain. So I think you've already got lending protocols like Aave on Ethereum, which kind of use a lot of the strategies that rich people use to avoid paying tax, to leverage their assets, to borrow against them like Elon Musk does. So I think these sort of tools are going to be so useful for Pulsechain in general in storing value in a bear market. You know, what you might find is that pools get adjusted for more stable token situations in a bear market. So just something to keep in mind. You know, I think people get it wrong. They think, oh, farming is just for a certain period when we're going sideways. No, if you do it correctly, it's when we're in a bull market, when we're in a sideways market, and when we're in a bear market. So yeah, I'd say experiment with these tools. It's
another thing I would say when it comes to liquidity providing is oh, sorry, I got all jacked up there. I must have hit a button. But liquidity providing is like kind of more or less being your own bank while you're earning that yield, kind of more like a bond in a sense, I guess, but a little way different. But it's more being your own bank, taking control of your own finances while you're earning yield, building your bags during the bear market, even if you're going down or sideways. Sideways is like perfect for LP providing, and then like you scale out a little bit during the bull so you don't get as hurt with some permanent loss, and during the bear, you know, you kind of scale back in, and you don't like take all your bags and sell it all and bridge to a bank or bridge out and then go to a bank and just like come back a few months later and buy back in. You leave like let's say you got 100 grand during the bull market, you know what I mean? You'd probably want to leave 30 grand on chain and scale back in while it was going down and liquidity provide at the same time so you can build back up for the next bull, because you got to think long term, not just like, oh, I'm going to be in this for a year, maybe two, and I'm going to get rich and I'm out. No, it doesn't work that way.
Yeah.
So
I mean, it's like this, right? So let me give you an example. Let's say you're holding Pulsechain and you're holding Vox, and you go, right, I'm going to put some. I've already got Pulsechain here in one hand, and I'll buy some Vox. Both of them are near the bottom. I think that no one's arguing with that. They both rise together. So yes, you do say liquidity providing is most advantageous for when tokens are going sideways, but it's actually most advantageous, which is a lot more rare, when the two tokens you select both go up together, right? That's the best form of liquidity providing positions. So let's say Pulse tops out, and then you take your profit at the end of it. You say, okay, I think Pulse has done its 100x, its 500x. What are your expectations? I'm going to sell my PLSX. So then what you might do is you might sell it for DAI, keep it on chain. Then you might go and find yourself, yeah, sure, you're going to send some to your bank or over the bridge, right? I'm sure that's going to happen. But what you might decide to do is the money you decide to leave on chain, you might then see farms like ours, farms like other people's farms. And then what you might see is the people aren't really interested in farming with their PLS and their PLSX at the time. The people that are, they're going to get the crazy yield. Sure, that means that they can afford to to wait till next cycle, and they're just going to dominate in their accumulation of those tokens. But the people that are more cautious, what they might do is you might find higher APRs for DAI against USDC, or basically stable token pairs. So I think there's a big future for that. And forking things like Aave, getting a lot of these lending protocols coming onto Pulsechain, they work hand in hand. You can borrow against your assets. So I think we're in DeFi for a reason, and we're in Pulsechain for a reason. Starting to get used to it. You shouldn't be afraid of these tools. You start to experiment.
Also, we've already seen, like, when we've had green days on Pulsechain and PLSX, INC up 5 to 10%. We've seen Vox and Hype and Increase kind of keeping up and having their kind of 5 to 10% kind of gains. Similarly, kind of like moving up together. That's probably because of the liquidity bonding, because each token has pretty decent pools with the from the farm the TVLs. So they kind of move up when the core tokens move up as well, that we've seen. So yeah, I mean, if that continues, then that would be nice, like, to not have so much impairment loss if they kind of like move together. And we actually did outperform them when Vox and Increase had their 4x and Hype did its 8x just about 3-4 weeks ago. We did outperform the core tokens pretty well, like, because obviously PLS and PLSX didn't do like 4x, 5x, 10x. So if you were in the farms, then and those moved up, and then now we're moving down, then it kind of just like balances itself out. You know what I mean? So.
Yeah, and these tokens can, like the smaller market cap tokens, can act more like leverage on the core tokens, especially if people just keep earning those drips from like the Hype token and stuff like that, and they choose to hold over to sell or rebalance their portfolios or whatever, while those tokens pump. If Pulse and PulseX go with it, it's just adds more fuel to the fire, which is great. I like it. Definitely intrigued.
And also, if there is anyone that thinks they're a part of another community and they think they would like to talk to us about partnership, our door's always open for that. So either get in contact with Nova, DeFi Nation, or myself. Always open-minded about any possibility.
Okay.
Yep, 100%. And then I did the experience, I think, with Incognito, for example. It was in terms of yield, it was one of the most successful ones. And if you actually got, let's say, $1,000 available to buy, protocol, and you bought Ink, like to buying the Incognito, when you bought it, you actually got that same amount of Ink plus your Incognito back after close to a year of just reaping those daily drips. So it can be very, very high, this PLSX, this Ink drip on these farms, on the Hype, on the Increase farm. It is a lot, like proportionally for what you keep it in your wallet.
I wanted to mention too, we have a collab with Emit. That was one of our first collabs. So if you go on Emit's site, emit.farm, there's a Vox farm category. There's right now 3 farms. It's Vox with Emit, Vox with Incognito, and Vox and Hype token that you can farm over there. So you can earn Emit with those pairs. And then you can take that Emit and pair it with Increase, because we have an increased Emit pair. That's, I think, like 300% or so.
Oh, there we go.
Yeah. So those are like up over 100%. I think most of them. I'm not sure what they are right today, but you can check those. Yeah.
That sounds great. I'm definitely intrigued. Am I? Yeah, I'm off mute. I'm definitely intrigued to scale in little by little with this Vox thing. Most likely we'll see in the coming days or whatnot. But yeah, I'm glad you guys came on. Where can people follow you guys if you want? Anybody hear me?
Yep. Yeah. Just very thankful for the opportunity. Bright Light.
Okay. Yeah, anytime. Hit me up if you want to do another video in the future. Doors open, guys. Like, I know there's a lot of projects
Yeah.
not getting views or streamed on because people don't like taking the risk out there. But I've seen this project around a couple months along with Emit. I jumped in on Emit and I've been liking it. I love the fact that they IPFS'd it too, and they're following a lot of the core values of Richard Hart and stuff like that. But yeah. Anyways, yeah, take it away.
Yeah, I was going to say, man, thanks so much for having us. Like, obviously, I have not been paid to be part of this team. I'm just a fan of DeFi. I helped Emit grow. I see Vox should have that equal opportunity. I think it's just as good in its own way. Obviously, people know from Pulse Bitcoin, so you can check us out at pulsebitcoin.when. We are working on a new DeFi site, so that's exciting. But you can follow me on Fat Sammy 4. But yeah, I'm around.
Yeah, I think the Vox Twitter handle and Telegram are the same. I think it's Vox_DeFi. And then mine is X, DeFi Nation X on Twitter. And I'm in both Telegrams for Emit and Vox pretty regularly, so you'll see me there.
And also, if you want to come on we do a Sunday podcast. If you ever want to come on, just let us know. Or if you got anything else, happy to jump on.
I'll definitely jump on one of these Sundays. Like, I don't get paid to stream about any of this stuff too. Like, I'm streaming about other platforms like Actuator a little bit, like strategies around that. I know I have my token, Yep token, you know what I mean? And I do look for opportunities and stuff like that from time to time. But right now, I'm kind of like, and let's just see how we hold up so far, because we've got plenty of yield tokens and stuff like that paired with Yep token and stuff. But yeah, other than that, I'm glad you guys wanted to come on and collaborate. I love the collaborations between all these smaller platforms. Just like, oh, we got a farm of your token over on this platform. The other platform does the same thing for the other token, and it's cross marketing there, cross pollination, and it gets the whole chain going. You know what I mean? And it's teamwork, and it builds unity, it builds trust over time, and it's great, man. And with things like what happened like with PDI and stuff, hopefully all that fades away and some of these projects get brought out into the spotlight and just put a light shined on it. And with that said, anything else you guys want to say? No.
No, just extending the thank you for Bright Light and for Fat Sammy and DeFi Nation to joining and dropping their knowledge and their alpha.
Yeah, it'd be great to have this retweeted on Twitter and try to get some of the replays to get people kind of to be able to see what everything's about, because I know it's kind of a holiday. Not a lot of people catching the live stream, so hopefully we get people kind of get to see it afterwards.
Yeah, I usually get some streams or replays, like at least 50 to 70 right around there sometimes. So we'll see.
Nice.
Yeah. Other than that, everybody, that's the show. And yeah, thanks for coming on, guys. If you guys want to stick around for a minute, feel right.
Yeah,
ahead.
Thanks for having us on. Yeah.
Yeah, and everybody, stay agreeable.
No permissions, birth looked up, taking flight falling. Knows dissidence, balanced in dark and light. Steadying the agreeable index plight. Crypto tuning up, yup, keeping it right. Yup, the meme that's on the rise. Agreeable, intense. One on a Pulsechain's pride. Opening those minds with all the positivity. Marching in its time. Cadence in the grind. Agree to disagree. Yup. Not tiny. Meet up, hits it right. Freedom and prosperity. The destination and the flight. Lighting up dad's farm. Opposed to that, nope, rule. Firing up on charts, yeah, flying straight.